Good morning. Be stock specific is the order of the day. Let's take stock of the news flow first before I get to why I'm saying so. So, first, on the global front, geopolitics is the order of the day. India slammed Pakistan as attacks on soldiers have escalated. S. Jaishankar, in fact, says that relations with China are not normal as well, and unless the border issues are resolved, the relationships with China cannot be normal. US prepares to fast track $500 million worth of arms for Taiwan. Yoon and Kishida are in Seoul for the summit, and the relationships between Japan and South Korea are increasingly becoming favorable, something that North Korea has voiced opposition against, and of course might not suit China either. And of course, in terms of markets, Asian markets are mixed, and the US futures are flat after a strong Friday close. Speaking of the strong Friday close, look at that: 2.25% for the Nasdaq, S&P 500 1.85%, Dow Jones 1.65%. The other cues obviously are favorable from a tailwind perspective for the US markets, but nothing that great being seen on the Asian screen because it's a mixed bag is all I'm trying to say. Uh, Between ASX, KOSPI, Shanghai, HSI, etc., it's all over the place, and therefore no clear clues per se when it comes to what the global screen is doing. I'll tell you very quickly though what the SGX Nifty might be indicating as well, because I mean, for whatever it's worth, the SGX Nifty about 0.15% gain is essentially saying that there is not too much in terms of gains that Indian markets might show on open. Okay, now let's take stock of the trade setup for the day before we move to the specific pockets, because I firmly believe that it's a stock specific day in the session today. Remember, in Friday's session or for the whole of last week, it wasn't a bad week per se, but the HDFC Twins selling that we saw in Friday's session kind of really spoiled the picture in an otherwise good week. And you could argue that considering the fact that there is nearly 2,000 crores worth of selling anticipated in HDFC Bank, the two twins, HDFC and HDFC Bank, might remain weak for the better part in the near term as well. But we've seen a bit of a slam dunk already. The trade setup will come up on your screen in a moment. We've seen a bit of a slam dunk that the HDFC Twins have witnessed already. The question is, can there be really more dramatic downswings? I really doubt. But can there be a dramatic upswing? That is the point which is difficult to fathom. The bulls in HDFC Bank believe that this is done, but I really doubt, and therefore don't quite know if that kind of stays in a way wherein the dip is bought immediately and there's a V-shaped recovery. But the good part is that indices are not seeing any large-scale selling, which may enable the broader markets to perform well. Remember, the trick for the last few days has been independent of what the Nifty is doing. The broader markets selectively are doing really well for themselves. FPIs have bought equity worth 11,700 crores, by the way, from 26th April to 5th of May, which I think per se augurs well for BFSI. Like, watch out for IndusInd Bank today, right? Could recover because it saw a bit of a selling in Friday's session, and the CEO is not resigned, and therefore there could be a bit of a recovery there. Specific pockets like hotels, QSRs, tire stocks, and real estate may continue to be stronger as per the dealing rooms. So these are a few things that I think people should definitely keep in mind from a market-wide perspective. From a results perspective, there's a UPL and there's a Pidilite, two large names. But otherwise, a clutter of mid-sized names, some of which might be important. Birlasoft, you want to see if indeed they get a bit of a reversal of that hit that they took in quarter three, because the client has apparently given them some uh, calls of a resolution, maybe. At least that's what the half-baked commentary or comments that came in from Birlasoft seem to suggest. We'll be waiting for further, of course, clarity. And I think we'll get that clarity when my colleague Tushar speaks to the management of Birlasoft later today and tomorrow. So I think that is something to watch out for. There's Apollo Pipes, considering how well pipe companies are generally doing, should be an interesting number as well. And Pidilite, with VAM prices having come off the way they have, can Pidilite spring a surprise is the question. Then stocks to watch. It's a very long list of stock reactions anticipated today. Firstly, Vedanta. Vedanta Resources have repaid a total of $800 million borrowed from Standard Chartered Bank. Encumbrances on the Vedanta stock have been released after the repayment of loans. This is as per Bloomberg. Now, keep in mind, this typically would mean that Vedanta will react positively. It's a very difficult stock to trade. Some of the news typically get priced in as well, but I reckon that this by itself has the merit to bring about some reaction on Vedanta stock. So expect a bit of positivity, I would suspect, on Vedanta in the session today. Then the big one, Aditya Birla Fashion and TCNS closing. Big one because of the nature of the announcement and not because of just the companies involved. Though it's a reasonably sized fashion brand deal, if you will. So Aditya Birla will buy TCNS for 1650. Like I said, not very large, but from a perspective of the space that it is in, it's important. ABFRL will make an open offer as well to buy 29% stake at 503 rupees from the public shareholders, and will acquire the remaining stake from the founder promoters to reach an overall shareholding of 51%. The thing is, the existing shareholders of TCNS will get 11 shares of ABFRL for 6 shares held. And this ratio suggests substantial downside for TCNS Clothing. And remember, TCNS Clothing has, in the last 5 days, run up about 9.5%. So an adverse ratio, even though the open offer is at where it is, but just the number of shares that these guys get uh, is not that great. And by virtue of this, I think this means that the ABFRL's open offer at 503 will get fully subscribed, because you won't get 503 in terms of the share swap that you're getting any which ways, and therefore in some sense it's a raw deal. I would reckon that TCNS Clothing will lose all of the gains that it's made in the last 1 week in possibly the single day alone. I mean, I wouldn't be surprised if there's the major gap down in TCNS Clothing in the session today. Now, ABFRL, remember the stock had actually corrected 5%, I think, in Friday's session or the last 5 days. And maybe there is some bit of an uptick that could come in here. But MK has an interesting view there. They say that while we see potential, they have a hold with a target price of 250. They say while we see potential value creation from ABFRL, we retain the hold with the target price of 250 rupees per share. On near-term slowdown or the potential share supply overhang from TCNS's existing shareholders, right? They get ABFRL shares, they may not want to hold. So they might go out and sell the ABFRL shares in the open market whenever it comes. So that's a bit of an overhang that ABFRL has to live with. But I'm guessing they're okay with it. But just a raw deal per se. For anybody who bought into TCNS in the last 5 days thinking that, oh, we are smart because we know that there's a deal coming. You know, the movement in the stock suggests that some people kind of knew about it. This happens really. I've now stopped expressing surprise or skepticism around this. But the larger point being that for anybody who bought into it thinking that, oh, there's a deal happening and it'll mean great for the stock, is in for a rude shock this morning. I would suspect. I may be wrong here, but I doubt I'll be wrong. Then Adani Total Gas and Adani Transmission, MSCI is apparently going to implement the weighting cuts in the indices in these two stocks, so to be watched out for. Simultaneously, though, viewers, I would urge people to look at the other newspaper thing that has also come about, which says that Adanis have secured the backing of 3 Japanese banks, which is UFI Financial Group, Sumitomo Mitsui Banking, and Mizuho Financial Group, according to sources close to a development. This is as per a newspaper report, which I've gotten, the image of which I've gotten on my phone. So it could be interesting as to what happens to the group stock. Standard disclaimer, of course, the Adani Group owns 49% stake in Quintillion Business Media, which is the owner of BQ Prime, which is the platform that you're watching this trade setup on. Then Syngene, big positive. Zoetis, which is a US company, has won the clearance from US regulators for Librela injection. The annual revenue for the drug could be over $100 million in the first year. And why this is important is because Syngene is the supplier to Zoetis for Librela, and therefore Syngene net is a direct beneficiary too. So I would suspect that you will see a bit of a rally in Syngene shares today. It should come up in a moment. I don't know why. Anyways, it come up. But remember, viewers, even if it doesn't come up, Syngene as a stock could be important in the session today. Then we're looking at some gains or some reactions. Yeah, thank you for that. Now let's move on from this though. Let's move on to Britannia. Q4 numbers. Now we'll move to the results, right? So Britannia, Q4 numbers, revenues up 13% at 4,023. The estimates are 4,066, so largely in line. EBITDA margin though, very good numbers, 19.9% versus 15.5%. The Bloomberg estimates are 17.6%. Fantastic cost control, I would suspect, as a result of which the net profit too at 558 crores versus an estimate of 501 crores is 10% above estimate. So net, if you look at those numbers, very strong numbers. Just the problem is that the volume growth number was just 2% versus expected 4% in quarter four. So the volumes aren't growing. And even for the future, the company is saying that they are interested in increasing the sales of packages. They will do smaller packaging and increase those things. So that's to be watched out for. I think Motilal also, I'll note out there on Britannia, said it all. They said the volumes have grown 2% for the quarter. The company is making investments in both greenfield and brownfield projects to expand the facilities, which would facilitate further growth in volume. Well, let's see if Motilal turns out to be true or no. The other thing is, viewers, there's a nice note by uh, Jeffries on Britannia, wherein, yep, they are saying that they are Britannia is being built now for the next 100 years. They have a buy rating on it. Their target price is 5,300, which is about, yep, a 15% or slightly more than that gain on the stock price. So do watch out for Britannia in the session today. I have a feeling that the street was a bit long and we might see a bit of unwinding there, but I may be wrong. I mean, the street was a bit long. You could see it in the way the FNO positions were getting built. So maybe very likely that there might be a bit of a selling that might come in because the volume growth is a bit of a chink in the armor. Though margin performance exceptional, I would reckon that. So net, sorry to confuse you viewers. Net, I think the news is mixed with the margin picture, a very healthy positive. The positioning might lead me to believe that there might be some trading selling that might come in, but I might be wrong. Marico, revenues up 4%, EBITDA 17.5 versus 16%, largely in line with estimates. Net profit 302, the estimates were 285. Again, you could argue largely in line with estimates. Some analysts believe that sales growth will be muted in the first half and margin recovery will be more gradual than earlier expectations, which might lead to a bit of a pullback. PTM, I thought the numbers were okay. Revenues up 13.2%, 2334. EBITDA loss has narrowed, net loss has narrowed. The commentary around PTM has been positive. Most uh, analysts that I spoke to track PTM were constructive of what the company is doing in the last couple of quarters, and therefore you might well see a continuation of the up move that we've seen in PTM since the last quarterly numbers have come out. So do watch out for that. Equitas Small Finance Bank, strong numbers. NII up 28%, PAT up 59% at 190. The estimates were 157. Gross NPAs improved, net NPA improved. Very likely could do well. Similarly with DCB, NII up 27%, net profit up 25% at 142. The estimates were 121. Gross NPA improved, net NPA improved. Very likely this one too could do well. Most brokerages are constructive there too. Then two other numbers which seem really strong. Alembic Pharma. Sales were flat, yes, but look at the EBITDA margins and look at the PAT performance. Extremely strong performance by Alembic Pharma. Well, I would be surprised if it doesn't react positively, and I'd be surprised if Zen Technologies doesn't react positively. Revenues up to 42%, 96 crores versus 28 crores. EBITDA margins expand dramatically. Net profit 32 crores versus 5 crores. Find a fault with these numbers. You can't. Very strong by these two small caps, so to watch out for these. To watch out for Blue Dart, unfortunately, not the strongest of quarters. Revenues up 4.3%, so flattish performance, but EBITDA down 31%, margins at 16.38. You could argue in line with estimates or maybe marginally lower, but look at the slam dunk in margins versus 25%. Not a great quarter. Net profit down 49% at 670 crores. Estimates were 80 crores. Not the best. If you're looking at the Bloomberg estimates, they were standalone. If you take the consolidated numbers, then these are the estimates at 80.55 crores, and therefore a miss on that too. You can't compare the standalone with what's been delivered, but net a disappointing quarter. Union Bank, GNPAs have improved. Bank of India to GNPAs have improved, but the commentary I thought was a bit of a letdown. Ajanta Pharma margins have completely diluted, 17% versus 24%. So not the best of quarters for Ajanta Pharma either. And then Coal India, a bit of a mixed bag because see, the numbers were okay, but I thought the Nuvama note summed it up well, so therefore I'm just bringing that, right? They were buying the target price of 301. Ignore the buy in the target. Look at the comments that they've made. They're saying that the Q4 benefits for Coal India have been offset by a one-off higher provisioning of employee costs. They have increased their coal prices estimates under FSA by 2%. given an improved product mix, and therefore they have rolled over the valuation to FY25. They're valuing the stock at 4.5 times FY25 EV EBITDA, and they came at a target of 301. Now remember, the quarter profits were marred by a very large provisioning for employee costs, as a result of which it's a big miss on profits. But brokers are saying that it's a one-off, and therefore don't extrapolate for the quarter, and therefore they are constructive. I mean, it could it could be okay, but maybe not a trading stock. My limited point of bringing this here is that if you look at the reported net profit number versus estimates and are disappointed, uh, don't think of it from a trading perspective, because uh, there is a one-off element that most analysts are saying about. Yeah, so be mindful of that. Other stocks in news: Z Entertainment, Z Media gets approval to submit an EOI for Reliance Broadcast. JSW Energy unit has signed 25-year power sale pact with Solar Energy Corp for 300 megawatts interstate transmission system. So that's a long list. I haven't even covered, for example, what might happen to Zomato as a result of the whole ONDC thing, where ONDC has crossed the 10,000 orders mark the last weekend because of amazingly competitive prices versus Zomato and Swiggy. A lot of people might actually think of switching there, and that might be a problem for these two food delivery apps, and therefore Zomato the stock. So do watch out for that one as well. So, like I said, a bunch of news flow. I wish you happy trading, and we call it a day on this very long trade setup. It's a packed day today. A lot of very interesting conversations. Mahesh Patil Johnson on Talking Point will be a lovely conversation to talk about the markets. World with Charles Gab. He's the founder of Gavical Research, and they've written a note called India and the New World Order. It's a fabulous note and promises to be a fabulous conversation. And then Anant Maheshwari, chairperson of NASCOM, president of Microsoft India, in conversation with my colleague Sajid Mandat. Thanks so much for tuning into the Trade Setup, viewers today.